Three, two, one, and we are live. Welcome back to the channel. This is Easy Fly. You see the title. Let's get straight into it. Stock market fearfulness. What is all of this that I've been seeing? Take a look. This is YouTube. You type in stock market, and literally every video is talking about the impending doom of the stock market. Bond market is flashing warnings. No value left. Stock market in a dangerous bubble. Stock market crash will be very different. What else we got here? The next stock market crash has begun. Stock market crash warnings. What's happening in the stock market? Okay, what else? Oh, here's a good one. The mother of all crashes are coming. Just from the look of my face, you can already see how I feel about this. Now, a couple years ago, I probably would have saw those titles and I probably would have freaked out. I would have said, oh snap, something is wrong. Everyone's saying that the market's going to crash, so that must mean the market's going to crash. But there's a couple of things you got to really understand. Just because everyone says the market's going to crash, that doesn't mean the market's going to crash. That's not how it works. All right? That's the first thing. And the second thing, based on what I've seen in the past and experienced, these people couldn't be more wrong on their timing of these stock market crashes. Like, it's almost ridiculous how bad all these YouTubers are when it comes to timing the market. Not even just YouTubers, just in general, the finance whole sector, the whole finance sector. When it comes to talking about, oh, the market's going to crash, they're always wrong. And the big thing here that people have to understand is you cannot time the market. You can't. You can be really good at it. You can be really good at timing and figuring out what's going to happen. Possibly. You can have an idea. You can guess. But you're never going to be perfect at it. You're never going to have, this is happening, so the market's going to crash tomorrow. There's no way. You can't. That's why you have to have different types of strategies to prepare for different scenarios. Which is, one of my strategies that I use. I have a strategy that I use that will help me and that will work in crazy scenarios. And I've talked about that in my old videos. Now, this is the S&P. All right, this is the ETF. It's tracking the S&P. I'm going to just take a quick look at it. We're going to talk a little bit about this. All right. And I've been seeing this for the last week. I haven't been on here for a little while. I've been taking a little time off, a little relaxation time. But I have been seeing these titles. And I've been waiting to make a video just to talk about this. All right. And this is what's been happening. This is S&P. July 7th was today. Today is the 9th. This is a week. Let's go back. They've been talking about this for about 2 weeks, the market crashing. And let's see. This is the 17th of June. Okay? We're July 9th. We were at 421. We went down. Okay, so I'm a little 2% dip. And positive. I don't see any crash. If anything, it looks like the opposite. Let's look a bit further. 3 month. Do we see anything abnormal here? All right, here, May 7th. That was a pretty good dip. All right, 3%. or so. Again, this is an ETF tracking, and so the percentages are going to be a little bit off. But there's a dip here. But when you look at the trend, you look at the slope of the line, what do you see? This is a positive line. Let's look at the year. Do we see anything weird? All right, here, 2020. This is when we had that big crash. Was it? No, that was in like February or something like that. This is September 2020. We had a big crash here, it looks like. But what do we do? Oh, it's going to come back up. Right here, if you said something about the market crashing here, I'd be like, okay, maybe. Because this actually looks like something, oh, what's going on here? You know? If you want to just erase all of this right here, and you were looking at this, you probably think, oh, what's the next thing that's going to happen? It went up. You know, had a peak, and it dipped, and had a peak again. But this was lower than the first peak, and then it dipped around the same. You know, generally the rule is lower lows. That means we're going to keep going down. But this right here, come on. Like this, what are they talking about? Honestly, like I don't see anything here that says it's going to crash. It's going to happen. Not right now. Now, I know people look at, you know, the different tools that you look at when you're looking at the market. You're looking at charts, PE ratios, and moving averages, and all these things. But again, the bottom line is you can't time it. You really can't. You can get good. Again, you can get good at predicting it, but you're never going to be perfect and say, oh, the market's going to crash tomorrow. Take all your money out. The only people who could possibly know that would be some type of big hedge fund who's purposely doing it on purpose. They got like $20 billion in the market, and they say, hey, we're going to take all that money out tomorrow. And then if they did, like, do that and then tell people, that would be insider trading, and that's illegal. So I don't think any of these guys are big dogs in the market. I don't see the market crashing right now. And honestly, we got to look at the basics, the fundamentals of what's happening. The biggest chance that we had to crash was last year. When COVID was crazy, and all the COVID stuff was happening, that was the biggest time that we had for things to crash. Why? Well, number one, the economy was doing terrible. All right? Everybody wasn't working. We were in quarantine. A bunch of people lost their jobs. People were staying home. All these things were happening. It's the NASDAQ. Again, do we see anything abnormal here? Let's check in. There's a little small dip here. Again. Yeah. Alright, it's a little flat here. Okay. Negative 1% for the week. Alright. 1%. Oh my god, I'm terrified. Oh, come on. Now, again, last year probably would have been the best time for there to actually be a crash with all those things that were happening. But when you actually look at what's happening now, around the country, all the businesses are opening up. People are going back to work. People are getting hired again. So if anything, the economy is doing better than it was last year. And what had happened last year is when all that happened, we had that massive crash. I got to put it on a 5-year. Here we go. You can see the 5-year. Here we go. February. We had this massive crash right here. So look, this is a crash, guys. All right? Do you see that? That's a crash. That hurts. All right? But this had an actual catalyst. The catalyst was the COVID epidemic and the quarantine. That's what this was. We don't have anything happening right now for something to happen like this. If we have something, maybe we have a small little correction. All right, we're going up really high. We'll have a small correction, but we're not going to have a crash. There's no real stimulus for there to be a crash right now. So, I don't know what people are talking about. I'm not saying that we won't have a dip. We could always have a dip. That's possible. We could have a correction. But a crash, this right here, that's a crash. All right? We're talking 294 all the way down to 191. That is a big crash. That's a crash. But this had a reason for it to happen. All right? That's the key thing that I want to talk about. And I want that to be the key thing when we're talking about what's happening in this fearfulness in the market. Now, there could be a couple different theories as to how something could crash. I'll play devil's advocate. Sure. People talk about things being priced in. So it's almost like an inverse effect where we had this massive, terrible thing that happened. The market reflected it. It went down. It bounced right back up. Who knows why? The Fed. And once everything's back to normal, all of a sudden we have another crash. It could be maybe because everyone's they're seeing that it's doing well, so like the opposite happens. That has happened before, but it's very unlikely, I would say. Generally, crashes happen when something massive or something serious and something negative is happening to an economy. That's generally when you have a crash. So that being said, in my personal opinion, I don't think we're having a crash. I don't think it's time to freak out and sell all your stocks. I don't think so. I would say be careful, of course. You always want to be smart. But please, 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 and this is something I say a lot. Just because someone says something doesn't mean you should do it. Please don't follow people. You got to always make your own decisions. Never believe the hype. That's the number one. Stop believing the hype. You got to always make your own informed decision. Educate yourself. And be smart. Just because someone says something doesn't mean that that's what's going to happen. Be smart. Think. It's Easy Fly. And I'm signing out.